We're going to bring in another voice and another topic, and that is talking about gold. Gold actually pulling back after hitting its highest level in, well, 5 months, not 5 years, but 5 months. Earlier in the week, joining us now is Peter Boockvar from Bleakley Advisory Group. It's kind of interesting because on a day like today, you think that gold might catch a bid because it seemed like a little bit of a fear trade-ish sort of thing, Peter, but you got the dollar out there getting stronger every day. You got the Fed out there. Where do you see gold going?
Well, it's definitely the clarity comments today that resulted in gold selling off. But gold has actually been pretty resilient in the face of this rise in the dollar because real rates are still remaining very negative. And I think the bull case for the dollar, well, the bear case for the dollar in 2021 and why it's so underperformed is because people either thought that inflation was transitory, which I think it's clearly not. And number two, if it's not, well, the Fed's going to taper, they're going to tighten, and why should you own gold? But I think we were reminded 2.5 weeks ago at the FOMC meeting that Jay Powell is going to be very slow in responding to the inflation and that real rates will probably get more negative and that inflation is going to run faster than they are in terms of policy. Therefore, I think that a few weeks ago was the bottom in gold and silver and a bull run has now resumed.
And where do you see it then going, Peter? I mean, ultimately, is gold going to be just a place to store money, or can you actually make money in gold?
I think there are times to own gold, there are times not to own gold, and I think right now in the inflationary world we're in, where interest rates are still very low and central banks are very slow in responding to that, now's the time to own it. The prices will go much higher, I believe, in the next couple of years.
Jonathan Golub, do you agree? You have gold exposure in some of your picks?
You know, I'm a stock guy, and when I see gold, I see an asset that, doesn't have cash flows underneath it. But, I'm a big fan of Peter's, and I think he's right to the extent that the Fed is likely to be more dovish rather than not. Inflation's likely to be more entrenched. I don't see why that would be good for gold. So I think that, again, I'm not a gold guy, but I think Peter's thesis makes an awful lot of sense to me.